Hello guys, welcome all. I'm your host, none other than Deko Mohammed. Today I want to show you how to account for goodwill in financial reporting. Remember, goodwill, there are two methods used in determining goodwill. We have the full method, and partial method. We have full method. The first method is full method. Then we have what we call partial method. Remember, the difference is that when you're doing the full method, this one you only determine goodwill attributable to parent only. So when you're doing the full method, you only determine goodwill that is attributable to the parent. But when you are doing the partial method, you determine goodwill attributable to parent and NCI. Parent and subsidiary. So whenever you're doing the goodwill in full method, you only determine the parent goodwill. But in partial method, you determine the goodwill using both the parent and the NCI. Let's start with the first full method. We won't start with the full method. The first thing you will always start with is purchase consideration. You always start with purchase consideration. We also call it cost of control. So you determine this. Let's say they were X. So once you have, remember we are doing the full method. We are doing the full method. So we started with the purchase consideration stroke cost of control. Then from this, you less net asset acquired. These net assets can be ordinary share capital. Now, but you have to take now the percentage of acquisition, then multiply that with the amount of the ordinary share capital. Let's assume the acquisition was 80%. So if we were to take 80%, most people will say that 80% appears mostly. So they can assume that 80% is always there. No, it can't be 80 all the time. Maybe even it can be 70, it can be 60, 90. For this case, even let us take at 90%. We acquired a company at 90%. So multiply this with the amount of the, we need to multiply this with the ordinary share, multiply this with the ordinary share that is in the trial balance. So once you do that, you will get the amount there. Then you go for share premium. You also take 90%. If our acquisition was 90%, you take 90%, multiply this with the amount, then you get it there. Then we have what we call retained earnings. Remember, these retained earnings, we only take the retained earnings. This should be at acquisition date. You only take the one that is acquisition date. The retained earning that is in the acquisition date. We only take the retained earnings when this company was acquired. Remember, there are so many retained earnings, so you only take that one which was acquired, because there will be a retained earning in the trial balance, and also there will be a retained earning. There will also be a retained earning at the acquisition and at the trial balance. So you only take the one which was at the acquisition date. You take 90%, 90%, multiply this with the amount, then we get that you get. Then what we have, we also have revaluation. We have revaluation. This one also must be at the acquisition date. This revaluation must be at the acquisition date. This must be at acquisition date. We also do the same. We take 90%, 90%, 90%, multiply this with the amount in the trial balance, and then you will get there. You will get it there. So once you have the purchase consideration, you less. Let me put them in brackets so that so that you know that we are subtracting from the cost of control. We are subtracting that from the cost of controls. So you're subtracting them from the cost of control. Subtracting it from the cost of control. So the amount we get there is goodwill. Once you subtract the cost of control from the ordinary share premium, retained earning, revaluation reserve, what you get there is there. But remember, these are not the only thing that will be affected here. Remember, when we have what you call dividend acquired, whenever it's dividend being paid by the subsidiary company, what we call the pre-acquisition dividend will affect this cost of control. We have to subtract the pre-acquisition dividend if it is there. So I'm just assuming I only have these ones as my net asset. But we can have pre-acquisition dividend. We can have also preference share capital. So all these net assets that have been acquired, you must multiply that with the percentage of acquisition with the amount given. So we go to goodwill. If we have any impairment, we need to less. If there is any impairment, if we have impairment, take the percentage of impairment, multiply that with the goodwill, then you less from there. You less the impairment, and you will get your net goodwill. But sometimes this goodwill can become a negative. If it is negative, we call it bargain purchase option. If the goodwill turns to be bargains, if it is turned to be a bargain option. So that is the when we're doing the goodwill attributable to parent. Now we also determine the goodwill that is attributable to the NCI, which is the subsidiary. Then what we do, because I'm not going to wrap, I don't want to repeat it again. So instead of this, I will have what we call now this one you can say partial method. We start with fair value of NCI, fair value of NCI. then you less the net asset acquired. Now I can say here we are doing partial method. I can say here we are doing partial method. Now we start with the fair value of the NCI, which will be given. If not given, then you need to take the percentage of NCI multiplied by the number of shares acquired for you to get the fair value of the NCI. Now, from the fair value of the NCI, we less the net asset that acquired. Now, remember, if our ordinary share was 90%, now NCI will be 10%. We take 10% of each case, 10%, 10%, 10%, 10%. So that's what we do, just very easy like that. That's how we determine the goodwill to NCI and also goodwill to the parent. Now, for you to get the total goodwill, you need to take the goodwill that is attributable to the parent, then you add this plus the subsidiary. You take the parent, then you add the one in the subsidiary. That is now you get the total goodwill. And remember, this goodwill now will affect our non-current asset. So that was the class on the goodwill. I tutor financial reporting. So if you want to have a full lecture, you can inbox that number or my email in the description. Then we can contact for more classes. Thank you for watching.